Okay, so uh, today our options market is like $95 billion. Our options market is the same size as our market cap. And then we discovered that the real strategic opportunity we had was we can construct a balance sheet of permanent capital with leverage. And when you take Bitcoin and make it 100% of your stock, you're going to trade probably if Bitcoin is trading with a 60 vol, you're going to trade with a 75 vol just because of the uncertainty of what the management team is going to do. Like I have the option to sell equity or not sell equity, or we might do something or not do something. I have the option to do debt or not do debt. That option is going to move you from 60 vol to 70 or 80 vol. Then if you actually execute the option by selling equity at a premium or by issuing convertible bonds, you move to 90 or 100 vol. I think that the whole idea of diversification makes sense when you don't know the answer, but you don't want to make a mistake. But I think in the field of engineering and in many fields in life, it's like when your kid is a good basketball player, you don't say, I think you should split your time between archery and jogging and swimming and basketball and football and hockey and 16 other things just in case. You tell them to focus on basketball, and you build the plane out of aluminum, and you don't diversify the steel beam into clay and bronze and balsa wood, right? If there's an answer, there's an answer, and you just tell someone the answer. When you don't know the answer, you're like, yeah, we'll go to Vegas and gamble and pick anything, but don't bet more than 2% of your money. Yeah, so the shareholders spoke. I mean, by the way, it's not a surprise to me. I was 95% certain they would like it because I meet with them and they were like, this is the most brilliant thing ever. Yeah, just keep doing this. So after that, we had a good week, and then November 5th came, and there's a red sweep, and all of a sudden you have a pro-Bitcoin White House, a pro-Bitcoin Senate, a pro-Bitcoin Congress, pro-Bitcoin cabinet. Bitcoin rages from 68,000 and 99,000. Short of it is we raised $10 billion in 4 years after our initial announcement. And that's like progressively work and learning. We're learning, and the market's learning to trust us, right? We're building a relationship. My relationship's not just with my equity investors. It's with the convertible bond investors. You meet with a convertible bond investor, say, I saw you last quarter. I saw you, you yelled at me for this and this. I fixed this. I'll do this. We're partners together. I promise you I will do this. I'm not going to mess with your opportunity. I'm not going to hedge it. I'm not going to steal your trading opportunity. I will do this and this and this. The guy goes, well, and I'm looking forward to this future. The guy goes, thank you for your candor. $500 million order. 50. Like if you have trust and people understand you, they'll give you your money. So what happened next is we raised $13.5 billion in 4 weeks. And if you look at my tweet, my tweet this morning is basically, we generated about a $9 billion plus gain for our shareholders in those 4 weeks. We're making hundreds of millions of dollars a day. It's tricky for conventional investors to understand it because you're not capturing shareholder value creation via GAAP accounting because for 2 reasons. One, Bitcoin's indefinite intangible, but 2, in the history of 50 years of the capital markets, everybody's been on the US dollar standard, which is 0 vol, 0 ARR against the dollar. And this is the Bitcoin standard, 60 vol, 60 ARR against the dollar. And so I looked at, option 1, I looked at option 2, and I thought, well, is there some monster company we can buy with our 500 million in cash? Because right now it's a liability. And obviously I couldn't find one, but then I looked at Bitcoin and I thought, Bitcoin looks like Facebook for money. It looks like the global monetary network. It looks like the dominant. It looks like the Google or the Facebook. And so I'm like, what's the big tech monster network for money? And Bitcoin looked like that for me. So I thought, hey, maybe I can do a $500 million acquisition. I buy 500 million of Bitcoin. What if you could buy a company growing 60% a year at 1 times revenue with cash that you don't need? That was the idea. And it was kind of out of frustration and desperation, but it was a strategic Hail Mary because your choice is just sell the company, give up. And the company would have been sold for $6 a share in enterprise value. Okay, $6 a share after 30 years of life. If I came to you and said, I'll give you $650 million, it's 75 basis points, go invest in something. Can you come up with an idea for something to invest in that yields more than 1%? Probably. If you can't, right, you're not in business, right? Probably you can. So we did that and Bitcoin rallied again. And all of a sudden we were able to raise $1 billion for zero. Okay. And then we realized, well, we might as well take another 500 million, and we took a $500 million loan at 6%. And we thought, well, Bitcoin's going up 60. We'll borrow at 6. We'll loan at 60. We'll capture 54. And it moved around. And then at some point, some banker called me and said, you can do this ATM where you can actually sell equity in the market. I said, you're kidding me. Really? That's possible? And actually, the greatest innovation of the past 30 years, guys, in the capital markets is the ATM shelf registration of equity, because it allows an issuer to sell shares pari passu to an investor. You're basically on the same footing as anybody else. It's a fair thing. And for my entire career, if we wanted to sell $100 million of equity, our stock would get hammered down 20%. And so it felt pretty good to not get hammered 20% and be able to sell into the market whenever you want. If you hold a dollar bill for 30 days, you're getting SOFR at 30, you're getting 480 basis points or something like that. If you hold $1 million worth of the S&P index for 30 days, you can get like 15% interest by selling the 30-day calls at the market. If you hold Bitcoin, IBIT, for 30 days, you couldn't sell the options until just recently, but now you can sell them and generate about 100% interest. If you sell the MicroStrategy call option at the market, it's 220% interest rate. Okay, just to hold the share. And so all of a sudden, what we've done is we've created a levered flywheel on top of a product which is already 4x as volatile and 4x as performant as the S&P. The result is our liquidity explodes, our options interest explode, and we do a convert bond in Q1. A week later, we do another convert bond. That's the first time in history anybody ever did 2 convert bonds back to back, 2 consecutive weeks. Then we do another one in Q2. Then we do another one in Q3. Then we do $1 billion of ATM in Q3. And then we start to get into a groove, and we realize that at the end of the day, the market's going to rally around some leader. And you're either going to lead in a decisive way, or you're going to sneak around and apologetically be opportunistic, or you're going to hide and wait. So if you track the liquidity in the options market and in the equity market, there was a major shift in Q1 and early Q2 where a lot of the volatility in the options traders and equity traders, they basically hopped off a dozen Bitcoin mining companies onto MicroStrategy because the Bitcoin miners were going to the halving where their revenues get cut in half. So my point really is, there's a disconnect between giving someone a piece of advice to make their life better and then saying, but I 98% don't believe in it. And so there's this point in the market where the market decides it trusts you and it wants to rally behind you. And we got to the point in October 30th and we just said, look, we're going to put the question to our shareholders. Do you want us to basically build this business or not? And after 40 consecutive Bitcoin purchases, after laying the foundation of a Bitcoin, development company, after actually rolling out the KPI of BTC yield, which is, we just sold $1 billion of equity. It was backed by 350 million in Bitcoin. We bought back the $1 billion in Bitcoin. We captured 650 million in the arbitrage. That works out to 4%. That 4% is like a Bitcoin dividend to the shareholders, but we're going to keep it on the balance sheet, roll it forward and reinvest it. So all of a sudden we had an equity trading with 100, I think today it's like 120 vol, basically double Bitcoin equity. But the real point is we're buying Bitcoin with equity, with debt, we're refinancing the debt, we're at all points, generally, we're doing it in an accretive way. And we get to 2024 and then we discovered the value of volatility. I mean, really understand it. Because in January of 2024, Bitcoin isn't an asset class. And the second week, the SEC approves those ETFs. And then you start having the snide comments like, well, now we don't need MicroStrategy anymore. They're like just a proxy. They're like a clumsy ETF substitute. We'll just put our money into the ETFs. But what happened at the same time was the halving was coming, and all of the investors, the vol traders, went through a secular rotation, and they started selling the Bitcoin mining stocks and looking for something else to trade. So I just said, like, I don't think you're going to come up with 50 good ideas. And so we just decided we're going to lead. I mean, John D. Rockefeller decided to roll up the entire petrochemical industry, and he bought out all of his competitors, all of his customers, all of his vendors. And first he did it for cash, and they would say, okay, well, pay me this. He'd go to the bank, he'd borrow the money, and he'd give him the cash. And at some point, people in the industry said, Standard Oil stock is worth more money than the cash. And he just started issuing the stock, and Henry Flagler, of course, built Florida with Standard Oil stock. So we do that. We get to the 500 million. Bitcoin rallies, the stock doubles, the stock triples. Now we just have an opportunistic run. We discover the convertible bond market, and they want to give us 650 million in cash pretty much for free. Yeah, I think the middle of 2020, we're running a $500 million business with 500 million in cash, generating 75 million in cash flow a year, growing 0 to 5%. Competing against Microsoft. Lockdowns hit. Our stock has 0 options, $2 million of liquidity a day. The options are worthless. The stock is worthless. We have no investor interest. We're stuck in a competitive trap. There's no way to crawl out of the competitive trap. We've got 500 million in cash, generating 4% interest, and all of a sudden Jerome Powell cranks that down to 0% interest. And then everybody's locked in their home, and I'm staring at, and then I watch all the Magnificent Seven stocks double. And then you realize that if you're sitting there, all your capital is going to be siphoned off by the Magnificent Seven. All your human capital is going to be siphoned off by the Magnificent Seven, right? Even if you have a good product, it won't be a good product in 5 years once all your engineers quit. And so we're kind of stuck in a trap. So at that point, you have 3 choices. You have a fast death, just sell the company. And a lot of people do. 99%. I had 100 competitors, guys. 99 of them, or actually all 100 of them, sold themselves. You just exit. Or slow death. I have my 500 million. I'm just going to start to pay all my employees massive cash bonuses to not quit, retention bonuses. But you're just going to go through the cash at some point. You're not going to be able to get out of your hole. You're going to linger on as a zombie, or you take a risk, and the risk is a transformational acquisition. It's like when you buy VMware. It's like, can you buy a company that's growing 20 to 40% a year? That's a monster world beater company. And can you buy it for cash or buy it for stock? And maybe you have a new lease on life. When the SEC approved the ETFs, they didn't approve options. And now here's the big idea, right? The S&P is 15 ARR, 15 vol. Bitcoin is 60 ARR, 60 vol. It has been that way for 4 years. We take a company with permanent capital and we create something which is 100 or 120 vol, 100 to 120 ARR. Okay, now that attracts all the options traders, all the arbitrageurs, all the Bitcoin maximalists. It becomes hot money. So when that happened, our options interest exploded and we became the #1 options market. And so now we hit upon this new stage where we realize we have a commodity that returns more than the S&P index that we can buy by selling our stock. So if you're an investor and I give you a return higher than the S&P, how much capital are you going to give me? Infinite. So we started doing that, and we sold $1 billion of that. And the short of it is we went from a $500 million investment to $10 billion of capital raise, and the stock, went up by a factor of 10 or 20. And then we got to 2024, and 2024 was a, by the way, I skipped the crypto winter where everything crashes from 66,000 to 16,000, but this is a half-hour podcast. So I'll just say it was a roller coaster. We went up to 66, down to 40, up to 66, down to 16, back. But and that's all very colorful.